Good afternoon, everyone. My name is Tobias Heinrich, partner in the global M&A practice of White & Case based in Frankfurt. I'd like to extend you a very warm welcome from the firm to the third of our series of autumn webinars. Today's topic is leveraging the power of digital transformation, and I'm delighted that we're able to introduce a panel of the caliber we have assembled, presenting live from London, Paris, New York, and San Francisco. Before I introduce the panel, a couple of housekeeping points. We will be taking audience questions, and these should be submitting using the Q&A function. If you experience any technical issues, please email emiaevents@whitecase.com. As a reminder, this webinar is being recorded and a copy will be available after the event. Finally, you should be able to see a graphic on screen. This is being created live by an artist and will be documenting the ongoing discussions. We will be returning to this during the session and sharing with you after the webinar. Before getting to our panel, I'd like to ask you for your opinion. We have a poll on the side panel of your screen. Please click over and tell us if you see digital transformation as an opportunity or a challenge for your respective organization. Joining me today is Amol Rajan, the BBC's media editor who covers these issues for the BBC and will moderate our discussion today. On the panel, we're delighted to have Florian Leibert, general partner at 468 Capital, a tech fund that invests primarily in Europe and the US. Florian founded and was CEO for over 6 years of Mesosphere, now D2iQ. Previously, Florian was in engineering leadership positions at Twitter and Airbnb, where he built machine learning systems and data infrastructure. David Riemenschneider brings a wealth of experience from the automotive and auto tech sector, having witnessed up closely how digital transformation has reshaped OEM business models. He's currently also a senior advisor at GCL Alstom. We are also joined by Kathleen Johnson, who provides the legal coverage for Societe Generale Investment Bank's digital transformation. Completing the panel is Arlene Harn, a partner in our technology transactions practice based in New York, where she presents clients in a variety of IP and technology aspects of private equity, M&A, and other corporate transactions. This panel will discuss the current challenges for boards and C-suite, M&A and corporate venture as a tool for transformation. And thirdly, we will ask the panel to divine on the future and tell us where digital transformation will be over the next 10 years. Now, Amol, do you agree with the audience today? Is digital transformation, as gladly the vast majority appears to see it, an opportunity or rather a challenge? Over to you.
Thank you so much, Tobias. And thank you everyone else for making the time to be here today. I should probably spell out one relevant aspect of my credentials in being here, and that is I know a bit about digital transformation, at least insofar as it applies to the content industry. I became the editor of The Independent, a UK newspaper, around about 7 years ago. When I became editor of The Independent, it was primarily a newspaper business which had lost tens of millions of pounds over the years and had an annual loss of around 13 million pounds. We had a 3-year plan to turn it around, digital transformation, if you like, and we achieved it. The Independent shut its newspaper operation. It was the first UK title to do that, certainly not the last. And by the time it did shut, it was trading profitably for the first time since 1989. It's today a digital business worth over 150 million pounds, something completely unimaginable 7 years ago or so. And I think that transformation hopefully is relevant to our discussion today. I want to start by looking at how boards in particular need to adapt to the digital age. I'm sure we are all familiar with boards who pay lip service to the idea of digital transformation. Perhaps they appoint a chief digital officer or they arrange some fact-finding trips to Silicon Valley. That's not really what digital transformation comes from. And in fact, that ineffective approach. Means thinking of digital as an add-on, a separate bit that can be contained rather than something that's integral to your company. In the year 2020, that approach won't do because, as we all know, digital technology has very profoundly changed our lives. And the challenges it creates for boards include some of the following, and I want to speak to our panel about this, starting with David Riemenschneider. First of all, how you really understand, deeply understand at a board level that the digital interface that you have with consumers has changed. How you recognize that innovative rivals can spring up from absolutely nowhere, what to do about them. Do you take short-term hits to your profits? How do you make the case for that to shareholders in order to secure long-term transformation? How do you cope with the fact that funding cycles in Silicon Valley, where Florian has worked extensively, are a sprint, not a marathon? And above all, how do you hire the best possible people to manage these transformations at board level and below? David Riemenschneider, I'm hoping you could hear all of that. As someone who's on several boards, I wonder if you could speak to that idea. In broad terms, what are the big challenges for boards? And maybe give us an example of where one of the boards you're on has succeeded.
Certainly. So thank you for that introduction, and hopefully all of you can hear me. I think there are some digital challenges as we go through this world of digital transformation. Regarding boards, I mean it's very difficult for board members sometimes to sit around a table and to actually recognize there are many things they don't know. These are typically an individual or groups of individuals who have quite a bit of self-confidence. And I think in this day and age, and especially what 2020 has offered up to us, just knowing that there are many things that you don't know, to recognizing that, bringing in advisors, shopping in sectors that you really find interesting, where there's been a lot of transformation, and bringing some of these people in either as consultants or hiring them. I mean, this is really, really important, because I can address some of these. The businesses that I am responsible for are more B2B type businesses, but at the end of the day, there are customers who are actually paying for these services at the end of the day for my clients. And the fact is, what you've got to do is try to get ahead of the curve, understand, where this industry is going. And I come from the automotive sector. What's happened in 2020 with regard to the way vehicles are acquired, the way people shop for vehicles. I mean, there has been just a massive transformation. It's something that would normally have taken years, which has literally taken months. When it comes to transactions and things like this, I mean, there's, I can't go into a lot of details, but I have just recently completed a transaction without actually having met the management team, at least as chair of the business, without meeting the team. Other members of my team have. But the fact is, these are the types of things that happen in a digital world where you can actually execute such an event like that.
David, aren't you completely terrified that, having not been in the room with these people, because you, as someone with your experience, must invest as much in people as in products or ideas? It must be very strange for you meeting people over Zoom or video conference call and not actually meeting them before acquiring it. But I suppose this is the real world now, right?
You do have to trust the people that you've worked with for some time, and and that have physically met the people, and I have to say that the way that the level of communication, I think I've probably had far more touch points with the management team than I would have in a standard transaction, where you're having physical meetings that take place under that are time bound. I mean, it's just been so easy to jump on Teams calls, Zoom calls, WhatsApp calls, and things like that, and actually to share and exchange. So I actually think the level of interaction is increased versus a standard transaction.
Terrific, thank you. I might come back to you for another example of a board that's managed this transition or transformation well. I'm going to go to Kathleen Johnson in Paris next. Kathleen, I know you're coming from very much from the legal point of view, but what are the big challenges that boards really face when trying to undertake the navigating this new world of technology that we're in?
Yeah, so the big challenge is about what operating model can be put in place by a legal team to cover the digital transformation of its organization. Because digital projects trigger many regulations, personal data protection and banking secrecy, particularly in big data and artificial intelligence projects, data confidentiality, IT security, intellectual property rights when using data or software of third parties, e-commerce when selling at distance to customers, competition laws when creating marketplace tools between consortium of banks, licenses and authorizations when offering regulated banking services to clients, contract law and liability when documenting offers to clients. And the role of a lawyer is to ensure that digital projects comply with all these regulations and that data of our clients are kept safe and confidential. So 2 years ago, our legal team was involved to provide an opinion on the compliance of digital projects with these regulations only at the end of the project workflow, just before its launch date. And this was totally non-productive, as many times the project sponsor had to redesign its project to make it compliant. And all the more, the long case-by-case legal assessment of each digital project was not compatible with the agility and time to market constraints of digital projects, and this created lots of frictions with project managers. Therefore, and this is what I would like to share, we completely changed our operating model and we decided to deliver a toolkit to project managers to allow them to comply by design. So this toolkit is composed of legal guidelines on each of the legal topics mentioned before that give the rules to project managers to be complied with. Trainings to project manager to spread the awareness on legal risk and regulations. Risk assessment tools with modular legal questionnaires according to project characteristics to enable project manager to make sure their project comply, and templates of contracts covering the most frequent situations, such as proof of concept, incubation agreement with startups, partnership with fintechs, and so on. And we even digitalized the legal chain by creating an API which enables our internal clients to self-generate the contract they need directly from our legal library. So this
Catherine, can I ask you a
toolkit has
question?
enabled project. Mhm. Yeah,
So,
this toolkit
go ahead.
has enabled project managers to be compliant by design in their project. So we are now consulted only on the most complex and innovative projects. So this model was very successful, and we reaped the benefit of this model during the COVID crisis, where we have been able to support a very substantial increase in the number of digital projects.
Can I just ask you a question about that, Kathleen? Thank you
Yeah.
very much. That's fascinating. Were the project managers at Societe Generale that you're talking about, were they happy to have this new system, or were they slightly unhappy because you had to explain a new way of working? Coming from the content business, which I know about, when you tell people that they've got to operate in a different way, that requires a lot of managing, and a lot of people get very upset.
We did some change management, yes, but the project managers were happy because they knew what the rules were and they knew how to structure their projects.
So if it's made clear to them how to do it, and they're told that this is going to be, if they believe that this is going to be a better way of doing it, they will support it. Okay, excellent. Thank you, Kathleen. I'm going to go to Arlene Hahn, who many of you will know. Arlene, I know you've been fantastically busy today in particular, so thank you very much indeed. Given your legal expertise, tell us about the boards that you've worked with to try and manage digital transformation, and if you have any sense of when boards get it right or boards get it wrong.
No, I think what David said is kind of spot on in the sense that we're getting deals done right now. I was getting a deal done right before this session and waiting for a wire to go through and getting confirmation. Technology will find a way, and I think what COVID has done in particular right now around the world is really accelerate, as David said, and expose kind of those businesses that already have transformed and those that haven't. And I think what we're seeing in particular with our boards and with people, as he said, who are quite knowledgeable in their fields and understand most of, what they're confronting in their business. Is digital and transformation and technology is a new area, and there are a lot of things, there are not a lot of unknowns. And so it really is a matter of not just training your board and training your leadership to understand what tech is coming down the pipe, but also making sure that your culture adapts to that. And I think, to Kathleen's point, I mean, that's the way you want to do it, right? There are a lot of missteps that you can take when you're making any significant change to your business model. And you want to make sure that you're navigating those potential legal and regulatory bombs that could be sitting there. And so something like a legal toolkit that Kathleen put into place, I think, is fantastic, because it really allows you, as she said, to comply by design. And so I think that's the way that companies have to think about it. As you said, technology and transformation is not in and of itself the end goal, right? You have other end goals. You're going to maximize, your customer base. You're going to change the way in which you deploy your product. You're going to increase competition with your competitors. Technology is the way that you get there, but it's not the end goal in and of itself. So I think you do need to work with your advisors, both, your technical advisors, but also your legal advisors, to make sure you're doing it in the right way and complying by design, as Kathleen said.
Very well put, and that takes us nicely on to buying tech and digital opportunities. And Florian, rest assured, when we can bring you in, we will do when we can hear you. David, I wonder if I could talk to you about a linking thought, really, between how boards need to adapt and when to invest and how to invest, because it's not altogether obvious to a lot of people in industries that are undergoing rapid innovation what makes a smart innovation and a smart investment. And you've had to make a bunch of smart investments. Can I ask you a broad principle first of all, which is, first of all, when's the right moment to make a commercial partnership versus when's the right moment to make a sort of equity investment? What are the principles that have guided you as you've looked to invest over the course of your career between those two ways of doing things?
So I mean, it's a good question, and it depends. It depends where you're coming from, actually. So I have a lot of the background in my boards are sort of private equity backed investments, and therefore, if there's a good idea and it's something that you should be investing in, it's probably something you should be acquiring, right? So I mean, with that at its base, it's acquisition is always a target. I mean, if it's something that you can bring in and to build up, as a bolt-on or as a standalone investment, I mean, that's certainly the way to look at that. I think the real challenge is all the noise in the markets. Go ahead. Sorry.
Can I just pick up on what you just said? If you're looking to invest, then you should be looking to acquire. Has that been a principle through your business career?
Well, it depends. It depends on who your backer is. I mean, if you are a private equity backed investment, for example, I mean the private equity typically don't make investments in other companies. They rather acquire that business, scale that business, and then exit the business much stronger and much higher returns. It's a different model if you're a public entity or if you aren't bootstrapped or something like that. You might do an investment, right? You might do an investment because it might be a lower cost option. You don't potentially get all the returns from that investment. You might bring some technology into the business, but it certainly is very dependent on your backing and what your end game is.
Those are fascinating sort of general principles. Can I go from those general principles to maybe a specific story? Can you give us an example over your very distinguished career of a board that really understood what digital transformation means? It sort of understood it at a felt level. I think you mentioned e-commerce in this context just before we came on stream, and a board that's actually really understood what digital transformation means and has made a lot of money by changing its culture, perhaps.
Yeah, sure, certainly. So, and if you just look at the e-commerce is a very, very good example. I mean, if a couple of years ago, you wouldn't have thought, while people were researching and using online resources to research potentially a vehicle you want to acquire, you wouldn't have assumed that somebody would be making sort of an end-to-end transaction online, including financing and payments and things like that, to acquire a vehicle, which tends to be the second largest investment people make in their lives behind housing. Knowing that the sort of the Amazon culture that we're all in, seeing some of the platforms that have taken place on sort of the used vehicle market, and there's a lot of activity online. I mean, to make that jump and to look for sort of new vehicle e-commerce platforms. I mean, this is something that is probably far ahead of itself. But the fact is, what's happened this year with the various lockdowns and changing consumer behaviors. I tend to think this is a very, very smart move. And time will tell. But I certainly think we'll never go back to the way things were, where people spend hours and hours researching online on a vehicle. They go into a dealership and they basically start all over because none of that research ported over to the dealer. There was a digital gap, and now we've bridged that gap and made the process that much more streamlined.
Excellent. Okay, you mentioned smart moves, and Florian Liebert has made a number of smart moves. Florian, it's very, very good to have you with us. You've got so much fantastically relevant experience. I was just talking to the panel about buying in tech and investing in tech. I wonder if I could lean on your experience, your amazingly relevant experience of Airbnb and Twitter, and particularly what happens when these companies, which you've been an engineer at, start off as the kind of outsider, the entrepreneur, the kind of the upstart, the radical, and they end up becoming the incumbent. That poses some pretty big problems. I mean, Twitter is such a dominant force in social media. Airbnb is such a dominant force in travel.
Yeah. So look, I think the way that these companies work, right, is like it starts out with like an idea. Like with Airbnb, I think like nobody really took it serious in the very first couple of years, right? They had actually a pretty hard time raising money, and then all of a sudden, I mean, it became a global movement, and I think the company in itself was founded by designers, by product designers, by engineers who kind of grew up in this digital age, and for that company, it wasn't a question of, but for that company, they were able to attract all the talent. They had to be digital first, right? So I think it's very different than a lot of traditional companies, that a lot of large companies that really have to attract talent, that have to make themselves digital, that have to transform themselves. These companies are born digital. They're born on the cloud. Every process there is much more lightweight than in these large corporations. So I think that's the big advantage you have, right? Like when you get started with something in the digital age first.
And what was the insight, or what was the unique proposition which Brian Chesky, the founder of Airbnb, had, which made Airbnb such a powerful force? What was Airbnb able to do that no one else could do, or what was it able to do better than anyone else?
Yeah, so look, I think Airbnb actually initially actually struggled to get traction, and then by coincidence or not, they actually found this small piece that really worked. They figured out that if a host, or if like a property, right, that you could book had really great pictures of really good quality, that the likelihood of someone booking it was a multiple higher than if it had poor pictures. So actually what Airbnb did, unlike companies like back then Booking.com or whatever else was in the market, they actually sent out photographers. So they actually signed up an army of freelance photographers and invested into putting these properties with a really high, with an initial high customer acquisition cost onto the platform. But it actually turned out that after like a month or two, that paid off already, because these properties were so much more likely to get booked once they had high quality pictures. So that was really like a little bit of a breakthrough moment for Airbnb. And again, like I mean, it's one of those things where like these small companies, you can try so many things, and like a large company probably wouldn't even come up with like an idea like that, and like some bureaucratic process would probably stop anybody from saying like, look, we're going to spend $150 on every property that's listed on our platform, right? And in these companies that are so customer centric, by the way, I think like Amazon, if you think about it, is also very customer centric. You initially take a lot of cost into you're okay with a lot of cost because you know that the customer lifetime value is so high And I think that's really the key difference to a lot of these businesses from really traditional businesses.
Just briefly on this section, Florian, given that we've now got you back, and I want to make the most of you before your
Yeah.
microphone goes. What was the unique value of Twitter? Because I mean, I've covered social media companies for a living. It's not altogether obvious to me, though in retrospect it makes sense, that Twitter's basic insight, the basic idea that they had, which is that if you keep messages to 140 characters, which is the length of a text message, people would want to share it. I mean, why did that work as a kind of mechanism for giving people this addiction to scrolling with their thumb?
Yeah, so there it was really, I think, what you said, right? Like the fact that it's constrained, right? Like this constraint actually like allowed people to be really creative, and they had to express themselves really like concisely. And I think I mean, with Twitter, it's interesting because, as you said, it was born as kind of a text message to internet application, right? So the origin was supposed to be a cellular phone, and you had all of a sudden like this large base of cellular phone users, right, that could use this platform, and you could just initially text something. Obviously, like once I mean, when Twitter launched, when was that? 2007, 2008. I mean, the like iPhone apps were not really where they are today, right? It wasn't really that widespread. Like the iPhone had just also launched a few years earlier than that. So it wasn't like a paradigm yet that you had apps, but SMS was like this really like large user base that was available for this new product. That's I think that's how they got started. And I mean, I think like I mean if you look at Twitter, it's actually interesting, right? Like they've really caught on in the US, right? Like it's for me, for example, it's the primary news channel for a lot of people in Silicon Valley. It's probably the primary news source. But if you look at countries like Germany, for example, like Twitter usage is actually relatively low, right? Like and I mean I find that actually really interesting because I mean Germany is not Germany is a pretty technologically advanced country, but this particular technology has not caught on. WhatsApp has really caught on. In Germany, I think like it's interesting because things are much more about like the private sphere, and people like I mean you see this actually on Facebook even. Like in Germany, like the amount of people that don't use their real username, right, that actually have a fake name is I think 10x higher than in any other country, right? So people will not put in their first name and their last name in Facebook very oftentimes. They will use like a pseudonym because they're much more concerned about privacy. And I think that's actually also been the problem with Twitter's adoption rate in Germany is that it's a very privacy conscious country.
It's fascinating you mentioned Facebook because I was going to say that one of the things we're going to talk about the future in a second, but Mark Zuckerberg has said that broadly speaking, the way the internet is moving is from a kind of public sphere into some much more privatized community groups and private groups, which is why he invested so heavily in WhatsApp. Kathleen Johnson in Paris, I know you wanted to, when we were talking beforehand, you wanted to contribute too about this idea of some broad principles for when people should buy tech and how to make the most of digital opportunities.
Okay, so back to the banking industry. So developing digital transformation internally requires important IT resources with strong skills, but secures ownership of the technology while addressing well internal needs, but with the risk of losing in agility and flexibility because banks are highly regulated. On the other hand, buying fintechs most often allows rapid technological gains but with the risk for the fintech of losing in agility because they have to comply with the heavy and complex processes of large international banks. But on the contrary, fintechs, while they bring technological gains, do not have the critical size to develop their business. So Societe Generale's choice was to find a good mix between the two, namely a good balance between flexibility, agility, critical size, technological gain, breakthrough innovation, and customer orientation. She has been very active with an internal startup call program, which enabled to create Forge, which is a fintech that launched the first ever bond issuance in the blockchain, and two external fintechs incubation program dedicated to market solution, one in Asia and one in Europe. And Societe Generale has also invested in fintechs that had solutions that we could not develop internally, but that perfectly matches our business model. For example, we invested in Lumo, which is a crowdfunding platform dedicated to renewable energies, Trezor, which is a bank-as-a-service platform, Prismea and Shine, which are two neobanks with financial management and treasury services, or TagPay, which is a mobile digital banking solution in Africa.
Thank you very much, indeed, Kathleen. That takes us very nicely to the next section, which is really thinking about the future of digital transformation. And Arlene, I wonder if I could start with you on that, because you said something very interesting about technology being not the end goal, it's being a tool that we use to navigate to the future. As you think about the sorts of deals that you're striking, what are the big mega trends in technology and in technological innovation which you feel companies really need to get ahead of if they want to win the future, as Steve Jobs used to say?
Well, I think it's, all of the technologies that we're all used to hearing about right now, things like AI right now in our virtual world, things like AR and VR, anything that helps people cross this virtual and digital bound, cloud, IoT, Internet of Things. I think Internet of Things is turning into everything. One of the last bastions I think is Internet of Things, which I think is starting to explode as well. And so it's all of the technologies that people really need to leverage in this new world that I think COVID has put a magnifying glass on, and changing the way in which we work, in which we live, the way we communicate or educate our kids or go to the doctor. By some accounts, there just e-commerce alone, there's about $1 million spent every minute on the internet right now. And if you're a business that hasn't, entered into e-commerce in kind of the scale and weight that you could have, I think you're going to really be left behind in times like these. So it's looking at those new technologies and seeing how you can improve the fundamentals of your business and your business model, not for the sake of technology, but with technology.
I want to ask you, if I may, then, following from that, Arlene, about the extent to which regulation is able to keep up with technology. I was speaking a couple of weeks ago to Sir Nick Clegg, and he said something absolutely extraordinary, which is that he was getting calls from people in Europe saying, "How dare you, Facebook? All this misinformation. You guys are terrible at, allowing anti-vaccine propaganda or conspiratorial stuff hog the internet." And Nick Clegg said that Facebook was saying to regulators around the world, for goodness sake, just regulate us. Do you think in the future, the next 3 to 5 years, that's going to change and regulation really is going to start catching up with technology?
Well, it's hard to say. I mean, technology moves so quickly that we've seen that legal regimes and regulatory regimes have not caught up. I think in particular when we're talking about something like misinformation or disinformation, if you're talking about government, we have the FCC, but they were not built to deal with, whether or not information that's kind of put out on various platforms is correct or not. They really regulate the pipes, they regulate the roads. They're not regulating what's going down those roads. And so I think what we're seeing right now is an attempt to kind of put a round problem into a square peg. Our government and our regulations currently were not built to deal with the problems that are coming up. So I don't know. I think it remains to be seen. That the president-elect Biden has kind of put forth what his priorities are right now. They are COVID, climate change, racial equity, and economic, recovery. And I think we're kind of triaging right now in this given moment. But I don't think anyone's lost sight of the fact that data accuracy, data transparency is an important goal that maybe the entire world has to think about. I do think it's a very difficult issue because, as Florian pointed out, culturally, different countries have very different views on what's appropriate, with respect to privacy. You start with China; they have a social media, social index, a social trust index. There's a lot less of an expectation of privacy in China, and then you go, somewhere in the U.S. where, it's become a little bit closer maybe to Europe, in the sense that California passed its Privacy Protection Act, which is a lot closer to the GDPR. Now, California is just one state in the U.S., but it's one of the largest economies in the world, and so we're starting to see how different nation states treat privacy and information, and I think it's going to be hard to kind of understand how to make a system that works globally around the world.
That's such a good point, and I want to put it to Florian, who I hope. Can we still hear you, Florian? Are you there?
I hope so. Can you hear me?
Fantastic. Okay, and then I'm going to bring in David and Kath. At this terrifying moment where I thought I was going to be talking into a vacuum, which would be an incomplete digital transformation. Just before I bring Kathleen and David in on this point, can I just put what Eileen said to you, Florian, with a bit of a thesis, which is that today there's really no such thing as the internet. You know, there are really several different internets all competing for supremacy. We have a Californian internet, which is dominated by a few big technology companies. We have a more European internet where regulation like GDPR and people like Margaret Vestager, the competition commissioner, who's coming down pretty hard on Amazon and Google from Brussels, have a much more regulated internet. And then we have a Chinese internet, which is a bit more of a walled garden, where the internet is a bit more a tool of surveillance. And really, there are these very distinctive kingdoms, these multiple internets. I think the phrase that a couple of British academics use is the splinternet. And the other big issue, which overshadows this entire discussion, is that many people forget that half of humanity is still not online. There are 3 billion people yet to come online. And there's a big question, isn't there, about what sort of internet they join. The Californian one, the European one, or the Chinese one. Or something else.
Yeah, so look at the way I think about this, right? And so I think actually a lot of this regulation is very bad for innovation, right? Especially because the people who are actually making these regulatory decisions actually do not understand what they're talking about, right? I mean, that's a fact. I mean, they didn't study computer science. They don't actually know what these algorithms do, etc. Right? I mean, I was working on an algorithm at Twitter that actually recommends you other users, right? That you should have. Like, of course, there's data being collected, but a lot of this data is actually somewhat anonymized because you don't actually. It's computationally intensive to use individual data. Like you want to bucketize it. That way, you can actually be much more efficient with your computation, meaning it's going to be cheaper in the end, right? So I think people the problem that people have, right? It's the same with any technology. When they don't understand things, they become afraid, right? It's the same with nuclear technology. Like people were really afraid of it, and that's why I think like to a large extent we now have a climate crisis in Germany because we actually have way more gas and coal plants than France, which was much more well, I would say sober about nuclear technology, and now they have a lower CO2 footprint, right? But that's in general. Like so I think people need to really like think about like the data actually helps build better products, and it actually doesn't. Like in the end, I think the use, like if you actually like create like a chart of like usage or like good versus like bad, like it's going to be way better. It's going to be way better for the general population to have more data. I mean, in any field, like with COVID, for example, right now, right? Like why are we in this mess? Well, because like we don't really collect data properly. It's really hard for us to analyze data that's collected improperly.
And of course,
I think like privacy, right? Like when people are so afraid of this, like when people are so like afraid of this like entire domain of data privacy, we're actually like giving up a lot on innovation.
I was going to say, and of course, some of the countries that have handled COVID impressively, South Korea, Singapore, the countries that often are unashamed in collecting data on individuals. And I think a lot of those individuals, I haven't been there, I haven't asked, but I think a lot of them were pretty comfortable with the amount of data collection if it meant that they didn't get COVID. David and Kathleen, I want to come to you guys for some closing remarks before we take some questions. Kathleen, just as you look to the future, whether it's in banking, fintech, whatever, what are the big, deep trends that you would say to all those people on this call that we should be looking out for over the future?
Yeah. So the future of the banking industry certainly remains to be written with our clients. And with increasing competition from fintechs and big techs, we see that finance is no longer the preserved area of banks. However, I think that banks have still strong opportunities. For individual clients, banks will have to position themselves even more as financial coaches, whose mission will be to help their clients optimize all financial aspects of their life. Whereas for SMEs and large corporates, We expect clients to value their bank as a partner, able to accompany them in their growth, but also during difficult times.
That's fascinating. It's fascinating how finance applies to different sectors. Thank you, Kathleen. David, guess the best way to understand what you think about the future is to work out where you're investing and where you're looking. As you think about the mega trends, automation, AI, robots, I was very interested that Florian said when people don't understand technology, they get scared of it. Well, a lot of people are very scared about robots taking our jobs and automation. As you look ahead, just to conclude this before we take questions, what are the deep, big trends that we should be getting ahead of?
Yeah, so I mean, I'm going to have to limit my answer to my sector, actually. So I'm a one-trick pony. So I'm an automotive guy, true and true. Originally from Detroit. So yeah, so I in my sector, we've talked about splinternet and things like this. I don't really have a dog in that fight here. I just need the plumbing to work, right? Because when it comes to e-commerce, when it comes to selling things, when it comes to providing better services, whether it's vehicle servicing, whether it's how customers engage with with the product. We just need the plumbing to work, right? So AI is very, very important. I sit on the board of an AI company, and to basically to map the customer journeys, to see how a customer touches a brand and how other customers touch the brand, and how those interactions then are a predictor for future service, and what that customer will want. I mean, that is a really, really big piece moving forward, to be able to get in front of that, to properly use AI. I mean, one of the things that I researched very recently is 40% of the European companies that say they're AI companies actually don't have any AI at all, any data science in their platforms. So that's the danger that we have here, at least in my world, is that you've got sort of posers out there that aren't actually doing what they say they're going to do. But for me, and the focus of this webinar in terms of digital transformation, just make sure what it is you're getting into, make sure what you're investing in, they're actually doing what they say that they're doing, and their customer is actually willing to buy that service, because that's the best piece of due diligence that you can have.
It's fascinating you say posers who aren't really doing what they say they're doing. It sounds like you're describing journalists, but I won't be offended in the slightest. Let me go to questions. Thank you very much indeed for these questions. We've got a couple here. Do please, everyone who's on this webinar, please send them in, and I'll try and rattle through as many as possible. I've got many other questions if you haven't, but please do keep them coming in. First question is, do you expect the way that legacy banks are investing in and buying industry disruptive startups to continue? And do you expect other industries will follow their lead? Let me put that question to Kathleen in Paris from Societe Generale. Kathleen, could you have a go answering that question, our first one? Do you expect the way that legacy banks are investing in and buying industry disruptive startups to continue?
Well, I think I have explained that maybe it should not be the case, because it's going to be a mixed model between. Our model is a mixed model between investing where it makes sense, which matches business, our business model and what we can develop internally. So I think this is quite a new model, and for me, I think the answer is no. I'm sorry. I'm a legal person, so I don't have all elements to answer this question. But in my area, I think I have demonstrated that no, it's not. We are engaged in a new model, investing in fintechs, which perfectly matches our needs and what we can develop internally. So, voilà.
Okay, thank you very much indeed, Kathleen. Voila, indeed. Let me put
Voilà.
voila. Yes, I'm glad. Nice to have a French flourish. Let me put the next question to Florian, and then I've got some more general questions to put to all of you. Florian, this next question, I don't know if you can read it on your screen as well. It says, given that, or indeed if you can hear me and I can hear you, but this says, given that a digital transformation to a digitalized economy cannot happen until there is proper digital security, how important is the reliance on distributed ledger technology? distributed ledger technology. Does that make sense to you, Florian?
Yeah, so I mean, so the I guess the crypto space. So I mean, I actually think we had digital transform. If you look at how things evolve, right? Like you actually really like have a product first, and later on you start securing it. You start securing the data behind it. So I actually I actually think that digital transformation or digital transformations that start out with like trying to be the most secure and everything from the get-go, I think you're setting yourself up for a failure if you're doing that, right? Like I think you have to iterate, and I think security comes after introducing something, after implementing something. You think about like all the ways that it could fail. I think if you do this ahead of time, um, it just doesn't usually work. Like if you start building a product and you only are focused around the security, I think uh, you're going to be in a never-ending loop of trying to improve something and trying to make it perfect, right? It's like, I mean, there's plenty of examples for this, right? Like, I mean, why do all of the, I mean, I guess uh, our car expert here, right? Like, I mean, like, why did a lot of the car companies, the traditional car companies, actually fail in producing a semi-self-driving car? Why did Tesla succeed? Well, Tesla decided like we're going to innovate and we're going to take as part of the toll that there might be mistakes. I mean, I have a Tesla, and the other day I was driving on the street, and all of a sudden the emergency brake went off, right? And I mean, because there were a bunch of like pieces of paper on the ground, and maybe the machine learning model matched that to an accident. I don't know. I mean, what the reason was, but I mean, that is the trade-off, right? Like that there will be you can't get 100% safety and security and 100% innovation. It's like it's always a trade-off, and I think everybody has to figure out like what is the trade-off you're willing to make in order to innovate.
What happened when your emergency brake went? Are you all right? Were you okay?
Well, I was fine. I mean, it was fine. Was thrown off. I was thrown forward a little bit. I was wearing a seatbelt, luckily, right? And so I was fine. I mean, but I mean, uh, like I mean, I don't think you can rely on the autopilot today. I mean, I wouldn't feel comfortable like having the autopilot drive me around in the city. But I mean, when I'm on the highway, like I feel pretty good about like letting the car take over. That's a pretty yeah.
Let me put your example to David. David, you've just been described as our car expert. You are indeed our automotive expert. Do you agree with Florian's analysis there as to what Tesla got right, which is that they accepted that there may be a trade-off between innovation and security?
No, actually, sorry, Florian. I mean, this could actually be the focus of a completely different webinar. But the fact is, those trade-offs have very serious implications. So Tesla and in many ways has taken an approach that you'll find no other vehicle manufacturer has done. Is there a reason why the other vehicle manufacturers have gone a little bit slower? Yes, because they're using LiDAR, they're using different sensors which are far more accurate, because that trade-off can cost a life. And the vehicle manufacturers, they're investing very heavily, either acquiring businesses or partnering with with experts in the field. Tesla has gone down a route of a certain technology, very what I would call sensor light, and the other vehicle manufacturers who have a brand and a legacy of some more than a century to protect are taking a completely different approach. And I applaud their efforts to actually to slow walk this technology.
Let Florian come back to that.
Yeah, so look, I mean, I'm not saying one is right or the other. I think the market has decided that Tesla is worth more than most of the other car companies combined. And like, look, I mean, I actually went into my car the other day and I had the option to upgrade for $2,000 from 4.2 seconds from 0 to 60 for $2,000, like getting basically 0.4 seconds better performance. I've not seen this sort of innovation anywhere else, right? Like, so I mean, I agree, like with like the self-driving capabilities. Like, of course, like there are potential bad implications, but on the other hand, right? Like we have an Audi at home as well, and I mean, like that car, I just can't drive it. I mean, like whoever designed the user interface to even put. I mean, you can't use the navigation system. It takes you 10 minutes to just put in an address, right? Because they're not software people, and it's, I mean, they think of the car as hardware. And by the way, I mean, like the Tesla car is probably not as great on the hardware side, but the software, I think, makes up for it. They're a software company, right? They're not a hardware company.
Let me put, before this turns into too much of an advert for Tesla, which I can understand and applaud. Let me put the next question, which we've got. Thank you very much indeed. No, I'm not giving you a hard time there, Florian, because it's right. Tesla's a useful example for exploring some of these dynamics. Let me put this to Arlene. Arlene, there's a question that's come in that says, how can we retain the personal touch and human element that brings so much value to industries like legal, whilst also capitalizing on the someone pouring a drink in celebration, whilst also capitalizing on the opportunities both in product. I can't quite read the end of that question. Forgive me, because it's fallen off. It's basically how do we retain the personal touch and human element that brings so much value to industries like legal amid all this technological innovation, Arlene? Sorry, you got a slightly incomplete question there.
That's okay. I think it's a good question. I mean, and it touches a little bit on what David was saying earlier about doing deals and not getting to meet people in person, not getting to do a site visit, not getting to, meet with the management team all day. But on the flip side, you actually do have more touch points because you're kind of in this virtual world. We're all together. I think when it comes to transforming the legal industry in particular, I mean, I remember doing research in books, in libraries, with pocket parts. Kathleen's probably the only person who knows what I'm talking about, and Tobias. And I remember when, Lexis and Westlaw came out, and it was, oh gosh, are we all going to have to be computer scientists now and learn how to research over, a platform and an application? And I think that's just part of the evolution of any profession nowadays, is you do become, to an extent, a technologist, just in the sense that we all become technologists. I mean, my 3-year-old just taught me something on my phone that I didn't know how to do. She's now 5, but she taught me when she was 3, and I thought that age was going to come a lot, later in my life, but it actually happened, a couple of years ago. And so I think, yes, there's going to be a little bit of a change in which humans interact, but I don't think it's going to replace that. The one thing I'll say about AI in particular is, I think everyone agrees, and I'm sure Florian would agree, that AI makes things faster and more efficient and more powerful. I don't know that we've cracked the code yet that it makes things more equitable. And so I think that's still something that remains to be seen, that we have to see if we can get that right.
Well, congratulations on having such a digitally savvy 5-year-old. My 5-year-old the other day looked at me, having used his iPad, and said, "Daddy, Daddy," and pinched me shut as a way of making me be quiet, which is the kind of digital transformation that I don't want to have anything to do with. It's 6:55, and I've just got a note saying it's time to hand over to Tobias, which I will now gladly do. But just before I do that, I want to say a huge thanks to the panel for an incredibly stimulating discussion, and for disagreeing politely when indeed we did disagree. So thank you. Tobias, over to you.
So thanks, everybody. This has been really great. And special thanks to Amal, Florian, Kathleen, David, and Aline for joining us today and contributing to what I think was a really interesting and insightful discussion. Many thanks also to the audience for tuning in, placing in a couple of really interesting questions, and all the best to you. We realize it's COVID, so all the best for your health, for your families, and stay safe. Thank you very much.